After that banger of an intro that took 3 hours of my life, let's get started why you clicked this video. Let's start my week 3 or part 3 of paper trading to profitability. Before we start, however, this is not financial advice and trade at your own risk. Let's explain what I am doing, how it works, and how it's done. I will say this is simplified and not entirely accurate, and I am doing this as examples to help you better understand how it works. So let's get right into it. My strategy is mainly continuation models from the auction market theory. I sometimes also trade failed auctions that causes a reversal then continues lower. So with that being said, let's understand the continuation model and what I'm even talking about. We used non-institutional data, unfortunately, because being free has its pros and cons. If you want institutional order flow data, I recommend using deep charts or any other, it doesn't really matter. So using this fixed range volume profile, it's an estimate. It creates 3 points we can see in settings when we check the boxes. Now, the very high where this line is the value area high. The very low with the line is value area low, hence the name value area high, value area low. So the center line is what we call the point of control. This has the most volume and is usually a price magnet is how I'd explain it. Now, value area is essentially marking your box for the very top line and then the very bottom line. That's it. Now that we identified the simple parts, you don't really need to know high node and low nodes yet. We then watch price close above value area. However, yes, again, I'm delayed 10 minutes for the sake of broke to profitability. I cannot micromanage, but if you paid for access, good for you. Now, let's set it again. If the candle closes above value area, it doesn't always mean it's going to continue. In fact, if it immediately pulls back into our value area, which I must say is where 68% of price goes back and forth, but we round to semi, then it's called a failed auction. However, if we rip completely through it and stay just right above it, even if it closes inside of it a little bit, then that's more confirmation for us that it will rip up. So with that being said, we set our stop loss at the low and target either the point of control or the high. That's it. Alright, so after the brief demonstration, let's finally start.
Check this out.
Okay.
I decided that after seeing my initial bias from last time that I traded actually hit take profit, I thought of the possibility that it could actually reverse anytime. So I decided to wait for price, and now let me remind you, I am delayed by 10 minutes. So with that being said, looking for micro reversals would be near impossible with my data. So I decided to play it pretty safe and looked at everything. Now when I meant everything, I looked at everything. Forex Factory, news, Nasdaq, CVD divergences, MACD, and after and only after I decided to not crash out and had my mind right, I decided, you know what? I have my bias, why not buy? I know and I'm confident it's going up, and if it does reverse, I'll have my tight stop loss still putting me green in the day. And so I did, and it completely went up and it hit my take profit. However, because I'm delayed, I couldn't micromanage it and it completely shot up. Because I don't know how to have a contract runner to scale, and so I lost a lot, and I also crashed out for $83.75. But despite that, I was green, you know? Yeah, let's just go to the next day. Alright, so I was extremely bearish on this day, alright? I was really confident that price would definitely reverse at this level. The reason I said that was because volume tapped into my zone. However, they created my failed auctions, which made it ideal that we were trading in a 70% zone. So with that being said, I kept my stop loss extremely tight and my take profit all the way at the value area low, and it was supposed to be a high RR trade of 1 to 5. But I made the mistake of adjusting my stops again, and it was a little too tight and too high of a risk in my opinion, so I decided to change it, which was a huge mistake because then price stopped me out for a staggering $62.50, putting me still in the green, but I was extremely tilted, and after seeing price completely reverse after stopping me out, I was so mad I just decided it's not worth my life yelling at a computer, and I just hopped off. Alright guys, now initially I was a little tired, you know, because of yesterday, and because I was editing all day to make my shorts. Please subscribe. And I was pretty solid, you know. I decided, you know what? I have my bias. I'm pretty bullish, looking for a long. Now, the reason why I'm confident it is pretty bullish for now is because I'm seeing buyers absorb the sellers, okay? I saw not 1, 2, 3, but 4 absorptions. Yes, by looking at the patterns physically, I don't know, but I didn't do it out of ego or emotion. I somehow did do it by literally looking at the chart and kind of feeling it. And I bought straight up. I know it sounds like gambling and all, but like, I don't know. It literally, like, I set my TP pretty tight at 80 ticks because if this downtrend held, then my position would be reversed. So with that being said, price shot completely up, putting me in green for the day at a $175. So before I close out the charts, I don't know why, but I was like, wow, I'm the best, and I decided to randomly put a buy limit order here out of pure instincts again. Now to be honest, I'm actually pretty confident it will go up, but we'll have to see another day when it gets hit. But I have a pretty good feeling that it probably will be gambling. But that was pretty much it. I haven't gotten the time to trade every day because I haven't seen much of my setups on Monday to Friday, and since there were quite a decent amount of news, I just stayed off the charts and watched it in silence. But yeah, if you found this recap helpful to learn or watch, then consider subscribing. It's free, and I would appreciate that. But thanks, bye.